Hello and a warm welcome. You're watching Business at 9 with me, Jude Sanat, and my colleague Shibani Garath right here in our Mumbai studios. Shibani, a lot of action on the street today, even as the US increases this velocity of strikes on the West Asia crisis, in fact, including a larger region as well now, something that could possibly spook markets. But for the moment, let's shift focus to India, where sources tell ET Now that quick commerce platform Zepto has put its initial public offer on hold and is instead working on raising $105 million through a pre-IPO equity placement. This according to sources from the company. In fact, my colleague Anurag Joshi joins in with some exclusive details on this development.
Online delivery platform Zepto has postponed its plans for an initial public offering after working on doing an IPO for months. And in fact, on July 21, Zepto had filed an updated red herring prospectus with SEBI and the exchanges. Meanwhile, Zepto is working on plans to raise $105 million through an equity placement, and this will be a pre-IPO placement of shares which will be solely to domestic investors. Zepto is in talks with financial institutions and family offices to raise the money, and this plan to raise money only from local investors is driven by Zepto's goal to remain an Indian-owned company that is having more than 50% local ownership. The company has plans put its IPO plans on a pause, and this followed a massive pushback Zepto received from investors in the IPO roadshow over the question of valuation. Now, until last year, Zepto's valuation was pegged around $7 billion. Now, in the roadshows, investors were not willing to move ahead with plans of participating in the IPO plan at a valuation over $3 billion. So the post-money valuation currently in the roadshow was pegged at around $3 billion post-money. This is a climb down from the valuation which Zepto had commanded until last year.
Right, Anurag, thank you so much for that. Now, Swiggy has reported marginal improvement in its bottom line in Q1, with net loss narrowing to 791 crore from 800 crore in the previous quarter. Meanwhile, revenue grew 6.7% sequentially to over 6,800 crore. The improved performance is clearly driven by quick commerce segment, where revenue grew over 16% to 1,232 crore. Meanwhile, food delivery business grew at a slower pace of about 6.5% compared to the last quarter. Harsh is here with more details.
Well, yes, so you saw the numbers with regard to the revenue flashing on the screen, but let me also quickly take you through the GOV numbers first off for food delivery and for quick commerce. So when you see the GOV numbers, EBITDA came in slightly softer on the food delivery side of things. So that may be a bit of a disappointment, where margins have cooled off from 3.3% Q4 FY26 to 3.1. So you've seen a 20 basis point decline there on that margin number. So that may not be the best, with regard to how investors view that number. They may not really like it as much. Quick commerce, though, the profitability has improved, and that is evident from the way in which contribution margins moved. From negative 1.8 contribution margin now moved to 0.2, which is quite a sharp improvement. 165 basis point improvement sequentially is what we saw, and that will give some comfort to investors, especially because now quick commerce obviously is one of the mainstays for Swiggy, both in terms of valuation and profitability for both of these platform companies. As a result of that, let's have a look at how the margins have shaped up and EBITDA has shaped up. Well, absolute EBITDA was negative 650 crore versus the estimate of negative 515 crore. So you've seen a large delta. The profitability has taken a bit of a hit, and that's because to some extent because of food delivery not living up to the standard. The other one is the loss coming in as a result, or the net loss, the bottom line net loss coming in at 791 crore versus the 717 crore estimate. This number was at 800 crore, so not a meaningful improvement seen on a sequential basis, just about a 1% percentage point improvement that we've seen on a consolidated basis. The EBITDA margins, though, have improved from negative 10.9% to approximately negative 9.5%. So that has seen a bit of improvement, but that's not translating to profit improvement, and of course the absolute number not helping at all. The top line was a little bit of a beat, but EBITDA and profitability has certainly disappointed, and that disappointment may well be driven by the food delivery business rather than the quick com business.
Shifting focus to Tata Steel next, the company has reported a mixed set of numbers for the first quarter, with revenue and EBITDA largely in line with street estimates. However, profit after taxes missed expectations despite rising 12% year-on-year. My colleague Avi Agarwal joins us with more numbers.
So Tata Steel has come out with its Q1 FY27 numbers, and let's have a look at them. The numbers are broadly in line with what we were estimating, with the revenue coming in at 60,794 crore rupees and EBITDA at 9,263 crore rupees, which is up by 25% on a yearly basis. The revenue was up 14% on a yearly basis. Talking about the margins, have come in at 15.2%, which is up by 120 bips when compared on a yearly basis and down by 30 bips sequentially. Talking about the PAT numbers, have come in at 2,318 crore rupees, which is a 12% increase on a yearly basis. When we compare these numbers with our estimates, we see that the revenue is up by 4.5% on our estimate, but the PAT is down by 7% on our estimate. So comparing with our estimates, the revenue is in line, the EBITDA is in line, but the PAT is a bit of a miss on our estimated numbers. So all in all, a decent set of numbers, in-line set of numbers from Tata Steel, with revenue in line, EBITDA in line, but a bit miss on the profitability front for Tata Steel.
Thanks, Avi, for that. Now, sources say Uttar Pradesh is set to amend its Semiconductor Policy 2024 following the notification of centre's ISM 2.0 guidelines. The state is considering an additional capital subsidy of up to 50% over and above the centre's approved subsidy, with support linked to projects cleared under ISM 2.0. We have Sumita with more details on this.
That's right. Exclusive sources are telling ET now that Uttar Pradesh's Semiconductor Policy 2024 is all set to undergo amendments. In fact, these amendments are expected to be rolled out after ISM 2.0 guidelines are notified and they are rolled out. Remember, the Uttar Pradesh government is considering providing an additional capital subsidy of up to 50% over and above the centre's approved capital subsidy under the ISM 2.0 mission. So Uttar Pradesh is going to be having a separate subsidy component as well. Now, the state government's budgetary support is going to be linked to projects that are approved by the centre under ISM 2.0. Remember, the ISM 2.0 or India Semiconductor Mission 2.0 was approved by the Union Cabinet a couple of days back with a 1.27 lakh crore outlay. There's a whole lot of focus on chip fabrication, ATMP, OSAT, display manufacturing and compound semiconductors. It supports design, R&D, packaging and advanced semiconductor technologies, and it is intended to reduce import dependence of India and boost India's focus on strategic sectors that includes AI, telecom, automotive, defense and electronics. In fact, sources also tell ET now that the UP government is expecting the Hiranandani Group-backed Tark Semiconductor proposal that is worth 28,000 crores to be approved under ISM 2.0. As of now, there is the HCL Foxconn joint venture which has been established. It's North India's first outsourced semiconductor OSAT facility. That's a unit that's located near Jewar Airport in the EADAR region, that's built with an investment of 3,700 crores. The foundation stone was laid in February 2026, but commercial operations and production of the plant are targeted to go live by 2027.
Moving on, Paramount Communications has said it is seeing strong potential in Madhya Pradesh's telecom manufacturing ecosystem. In fact, the company's managing director, Sandeep Agarwal, has said that the upcoming telecom manufacturing zone in Gwalior could be a game changer. Let's listen in.
Investing into 20 terawatt, which is equal to $200 billion of investment, which is only the beginning, I believe. So I believe that our investment in Gwalior, if it happens, will be very nice, very good, and will add up to the Make in India initiative of the Government of India. Our first project is Narmadapuram. The infrastructure building has just started. So we are investing about 300 crores there. And the next phase could be Gwalior.
And how much investments are likely that?
So could be around 200 crores to 300 crores, depending on the land which is available. With approximately 10 crores per acre, because of the limitations. And but the best thing about cable industry is that the requirement of manpower is quite high. So I would say that for a 20-acre project, if I go, we would be having at least 500 or maybe if you have the indirect or the part-time employees which we'll be having, it could be about 700 people which we could employ there.
Right now, India's AI ambitions are taking a major leap forward. Major announcements are expected from Sarvam AI in Bengaluru, where key announcements are expected on foundational models, enterprise AI, developer tools, and India's AI infrastructure. My colleague Mansi caught up with Dr. Vivek, co-founder of Sarvam AI, at the event. Let's listen in.
I think if you look at it, I think we really, AI is a technology that is going to change the world. And I think that we need to build platforms. And I think before this, we had some models. Now we are actually coming out as a platform company with infrastructure at the lowest layer, models, and then harnesses which are actually used to build various applications that people want to do. It's very important for us to be able to do this in India because it is so important. I mean, if you don't do that, then you only have choice of, American or Chinese models. And I think the important thing is that we need to have the ability to have our own, AI platforms. And that's really the beginning of what we want to do. And I think that success for us is very clear when a significant portion of AI usage in India is actually served from India, right? That's the point.
That's right. And one of the biggest trends of Sarvam is Indian language AI.
Yes.
And that's quite innovation in itself because India is a country with a lot of culture, languages, and that's what you have tapped into. So how close are we to an AI that genuinely understands literally every language and not just translate it?
See, I think the models are getting better all the time, and it's fascinating the abilities of these models to do things that even a few months and I'm in the field, you're still excited and fascinated
you
about.
See the game every day.
Unfolding in front of you, which is exciting. I think that the AI is going to be a way by which which actually will enable access to many, many more people. And I think that that's something that will happen in the times to come. And I think and especially we need to make sure that it is delivered at a cost that makes sense to a country like India. And that's also one of the focuses of what we want to do.
Absolutely. Another very important thing is that India has categorically spoken about AI sovereignty. That's very, very important.
Yes.
So how important is that India owns not only applications, but at the same time models and infrastructure altogether?
No, it's critical. We have to own all three.
Yes.
We have to own infrastructure. We have to build models. We said that we are committing to actually committing to build a trillion parameter model, and that's something that it's because we think that all these things are absolutely needed in India.
Yeah, and slowly and eventually we are moving towards that.
Yes.
Sarvam AI, powered by NVIDIA. So the event is powered by NVIDIA. Talking about the same, what role do global technology partnerships play while still keeping India's AI ambitions intact?
See, I think you have to work with global partners to do things. But I think the important thing is you have to be in control of your own destiny, and that's the most important thing. Today, if you look at from a perspective of training AI models, NVIDIA is by far the best as far as that's concerned. And then we have to use that to build our own models. But I think if you look at it from a country perspective, I'm not talking about Sarvam per se, at a country perspective, we need to figure out how to actually be independent in all ways, right? Atmanirbhar in all ways. But that's something that's not a short-term thing. It will take 5 years, 10 years to do that. But the intent should be there, and people should put in the hard work to make it happen.
Well, despite global geopolitical uncertainties, India continues to stand out as an attractive investment destination. At least that's the word coming in from Arth Bharat Investment, that remains optimistic on India's long-term growth story while highlighting the rising opportunities in Gift City. My colleague Akansha caught up with Sachin Saurikar, managing partner at Arth Bharat Investment Managers, to discuss the outlook for global markets. Let's listen in.
First of all, thank you so much for coming here and giving me this opportunity to speak with you. First of all, we are looking at both equally. Okay, we really like the India growth story. We still feel there is a lot of positive potential here. In these difficult times, we are still investing as an inbound investor in India. At the same time, I believe that the outbound investment, people are today seriously considering. A lot of them are talking about investing in international markets, and we want to enable that. And we are talking with banks like HDFC, ICICI Bank, SBI, so that the depositors who have bank accounts in these banks have a smooth process under LRS to shift the money through international funds. So we believe that that growth is very high. Today it's just $1.5 billion or $2 billion, but we expect in the next 10 years, this could be as well as $8 to $10 billion of investment happening every year.
Yeah. Now coming to Gift City, so Gift City has actually been positioned as a global financial hub, and even you are planning to expand here in Gift City. So what opportunities do you see coming in the next future? And just tell me about the opportunities that you see here in Gift City.
We see substantial opportunities, like for instance, the tax is very well settled now. So we expect the inbound to increase because most of the institutions were waiting to see how the tax code works. And if it's working smoothly, then they could positively, more of them could shift to Gift City. So the inbound story continues as it is. Almost as he said, Mr. Pradeep said, it's about $19 billion of inbound fund. That's something to be proud of. And outbound is something that we positively see growing a lot. The very fact that RBI and the Gift City allow for any overseas portfolio investment with any entity. So if you have a legal entity in India, 50% of the net worth of that entity can be invested through a fund in Gift City. So this regulation is only valid for Gift City, and that's something which is very positive for the growth of Gift City.
Yeah. Now my last question to you, how are you positioning your portfolios amid this uncertainty that we are seeing because of the geopolitical tensions? Are you increasing your percentage in defensive sectors, gold, equity? What exactly?
See, the fund managers keep taking a call on this. Our fund managers are very clear that some of the US continues to be positive. So we have a US hedge fund and we are launching a global equity with primary focus on US. So we believe the US story will continue. There could be some geopolitical issues or some issues related to interest rates, but overall story looks positive. And we would continue to invest there, and that is what we do. Plus, of course, the India story. While the last 2 years or 3 years, we have not seen anything happening in Indian markets, but the fact that in these 2 to 3 years, the economy has grown, the companies have shown positive, good results, has made Indian markets attractive. So we continue to remain positive in Indian markets as well.
Right, now moving on, India's capital markets continue to witness robust retail participation, but there remains significant scope to widen investor base. Speaking at the 31st Anime Foundation Day, SEBI Executive Director G. Ram Mohan Rao said India now has over 13 crore unique investors, highlighting the rapid growth in market participation and its role in strengthening the country's capital markets. At the same time, he stressed the need for higher standards of compliance, noting that some market participants continue to fall short of best practices during regulatory inspections. In fact, Rao underscored the importance of strong governance and adherence to regulations as India's capital markets continue to expand.
Is a significant achievement. The demographics of our country clearly indicate that we have a long way to go in order to cover the entire nation. Some estimates suggest that 1.4 billion population, 68% are in the ages of 16 to 64, also called as working age. This roughly works out to be a population of about 90 crores. So we have a lot of scope to go ahead. Most importantly, it should foster a culture where compliance is viewed not as a regulatory burden, but as a business strength. Well-governed markets ultimately benefit every stakeholders in the market.
Moving on, the labour market remains relatively steady with initial jobless claims at about 197,000, better than estimates that initially suggested that 200,000 was the number. This while continuing claims also came in slightly below expectations at about 1.782 million. However, the growth picture remains weak with the US Q2 GDP growth at about 1.5%, well below expectations of 2.2%. We have Avi with more details on this development.
The US has come out with its economic data and let's have a look at it. So the US initial jobless claims stands at 197,000 against the estimate of 200,000. So that is a good number coming in for the US economic data, where the initial jobless claims are a bit below than what was estimated at 197,000 versus an estimate of 200,000. The US continuing claims stand at 1.782 million versus the estimate of 1.789 million. So almost in line with what the market was estimating. Up next is the US Q2 GDP growth rate on a sequential basis has advanced at 1.5% versus an estimate of 2.2%. So the GDP growth rate for Q2 is lower than what was estimated, since the estimate was of 2.2%, but the numbers have come in at 1.5% for the GDP growth. Talking about the US initial jobless claims 4-week average stands now at around 202,000. So that is the 4-week average for the jobless claims. Talking about the global indices, on their opening have seen a good rally, since the Nasdaq 100 is up by 3% and Nasdaq is up by 2.5%. While the S&P has climbed by 1.25% and Dow Jones is also in the positive by 0.6%. When we talk about crude and Brent, we had seen that yesterday it was up by around 5%, but today it is in the negative, with the Brent down 1% and the crude oil also down by 0.3%.
Right, now moving on, the Bank of England has left its benchmark interest rate unchanged at 3.75%, opting for caution despite mounting inflationary risk. The Monetary Policy Committee voted 6-3 in favour of holding rates, with 3 members backing a quarter-point hike as renewed tensions in the Middle East raise concerns over energy prices and inflation. The central bank expects inflation to climb to 3.2% later this year, remaining above the 2% target, even though June inflation eased to 2.6%. Governor Andrew Bailey and the majority of policymakers chose to wait for more evidence before tightening policy further, while markets interpreted the decision as a signal that borrowing costs could remain elevated for longer. The pound weakened slightly and UK bond yields edged lower following the announcement.
Meanwhile, a historic football clash is coming to India. The Blue Tigers will take on 5-time world champions Brazil on the 3rd of October at Kolkata's Salt Lake Stadium, marking the first ever senior international between the two nations and Brazil's first senior men's match on Indian soil. Now, Brazil will also be India's highest-ranked opponent since the FIFA rankings were introduced in 1992. So while squads for both teams are yet to be announced, expect some big names to feature in this blockbuster friendly.
Right now, Indian football is set. Right now, Indian football is in fact set for. Right, more from the world of sports. Ajinkya Rahane has called time on a distinguished 15-year career, announcing his retirement from all formats of cricket. The former India captain retires with an unbeaten record as the test skipper, 4 wins and 2 draws from 6 matches. His defining leadership, in fact, moment came during the India's historic 2020-21 Border Gavaskar Trophy triumph in Australia, where he led the comeback after Adelaide defeat beat and struck a memorable 112 at the MCG. Rahane also built a reputation as one of India's dependable overseas batters with memorable centuries at Lord's and the MCG.
And with that, it's a wrap from Shibani and myself right here on Business at 9. Thank you so much for watching, but the news and updates will continue on ET Now, so keep staying tuned. But for the moment, it's goodbye from us.